last year was in many ways a difficult year in emerging markets. Can you say something about the developments and what sort of caused the...
In some sense, we can see it was a difficult year because the difference of returns from industrialized markets became quite substantial. In other terms, for SKAGEN, it was a good year, and SKAGEN Kon-Tiki in particular, because we could see that our good ideas worked better in a market not so much influenced by macro swings as we saw back in 2011 and partly 2012. And so in some sense it validated our investment philosophy with better relative and absolute return than most of our competitors and market.
Some of this development has also continued into 2014. Are there new aspects that we need to pay attention to, or is it more of the same that we saw in 2013?
It's a couple of differences. In 2013 we saw very much a reversal of capital flows, which meant that a lot of the corrections came through in the currency markets. In 2014 we have seen the beneficial effect of falling currencies in a couple of emerging markets. For instance, Indonesia and India seems to have stabilized their foreign economy and has subsequently had a fairly good return in absolute terms and relative terms. A couple of other countries are in the process of adjusting their economic policy to new realities, which we think will be beneficial looking ahead. A couple of other countries takes their time, but will in due course also review their policies, which all in all means that we have a very interesting field to find investments and nurture investments for the coming years. Whether this correction or a correctional process will continue for how long and to what degree we do not know, but we know that in the course of history of SKAGEN we have seen 5-6 crises which has regenerated the portfolio and given very good return afterwards.